Adolfo, welcome to the Iberian Property Talks. It's really pleasure to have you with us. You have, beside the Spain responsibilities, you have a role on an European level. So, more broadly, the action of the government is being the right one till now to face the crisis, or do we need to see more European solidarity?
Good question, Antonio, and thanks for inviting me. Well, obviously, first of all, we have to put the things in context. No, we are living probably the biggest crisis we've ever lived in our lives in terms of health and sanitary impact and potentially economic impact as well. So I guess governments are under a lot of pressure to do things that probably they haven't been required before. So that's to put in context. Having said that, I think in general, the measures are in the right direction, talking generally for Europe, for US, for the main economies in Asia, which are about providing liquidity as we navigate through this demand shock, to create some coordination between monetary policies and fiscal policies, and of course, and foremost, first than those two, to try to create the right policies from the healthcare capacity, from the isolation measures in order to stop or at least decrease the expansion of the virus. All those things, I think, have been positive and in the positive direction. I guess there are a lot of things to improve and many things to be done. And we can probably move into that later.
For real estate, and especially tourism, is being a very hurted industry. What do you believe shall be the urgent policies to relaunch the real estate sector, the tourism? What is now the next step?
Yeah, I think we need to keep insisting in the policies that have been already defined. I think they are in the right direction. We need to make sure that the liquidity is provided to the players, to the companies, to the normal people. It's not only opening those facilities of lending and those facilities of cash. It's making sure that they arrive at the right time to the companies and to the people, and that's a massive effort. We need to keep doing that, and we need to make it on time. We need to make sure that, especially for Portugal and Spain, obviously the impact of hospitality and tourism and leisure, it is a major part of the economy. And we want to avoid that these companies go into bankrupt or fail to survive. So it is very, very important that liquidity is provided on time. That's a temporal measure. It's not going to be enough just to provide the liquidity. The second dimension is how we try to go back to normal or the new normal as soon as possible, and that relates to the policy measures on the health front, and that relates to the two main concerns, which is how we are going to define the way to track the people that are positive and to train the people that are positive in order to make sure that we provide a safe environment for people to go back to work as soon as possible. That will create confidence, that will help to open borders as soon as possible, and that will help then leisure, tourism, and hospitality sectors to have clients, which is the key aspect in order to go back to feasibility.
With all this liquidity coming to the market, all this printing money on unseen rhythm and level, what this will mean for real estate in future? Can it mean more availability of investing money in 1, 2, 3 years ago?
Well, I think the first thing we have to have clear is what is the short-term impact, and then try to create scenarios depending on how things evolve. In the short term, we are going to see, of course, defensive policies to manage the balance sheet and to manage the cash flow. We will see companies deferring capex. We will see companies deferring dividend payments. We will be companies focusing more in its core. And that's a normal policy in order to make sure that those balance sheets are strong enough in order to navigate through this demand shock that we are having derived from the coronavirus impact. In terms of what's going to happen next, once we are sort of back into a new normal, obviously once real estate will still be seen as a category that fits perfectly into the diversification for investment portfolio. At some point, this liquidity might create, when we go back to a more normal environment, some pressures in inflation. And if that happens, real estate will be well positioned in order to hedge inflation. I always say that when we try to analyze overall the situation, normally a crisis it comes from one of the three pillars. Normally, more than one at the same time. It's either a crisis of supply, it's either a crisis of demand, or it's a crisis of leverage. In this case, we have to remind that we had a very sound structure in terms of supply, generally across the board, but specifically as well in Portugal and in Spain, that we have deleveraged a lot of the sector, and the companies were in a sound sort of balance sheet situation before getting into this crisis, as opposed to the global financial crisis, where we know the situation of the banking sector, etc. And of course, we didn't have a demand crisis. Obviously, the effect is now we have a demand shock, very brutal, which is going to materially impact dramatically in the second quarter. In some cases, 70, 80% of the revenue disappearing. In some cases, even 100%, because shops have been closed. But still, the structural situation of supply and leverage are sound. Of course, the longer this takes, the leverage side will change, especially on the public side of it. We are going to see debt going up. And to some extent, private leverage will need to grow as well. So it's pretty much related to how long it takes to define if this is going to be a temporal shock or a structural crisis. I am positive with the measures that we have taken, that even if it's going to be a severe impact in 2020, I still see that 2021 will see a bounce back on the economy at global level.
This situation, do you believe this is time for opportunistic investors? Core investors will remain active? This will be the time for which kind of players? And do you believe that we will have a shock also in real estate prices?
Well, I think investment volumes are going to drop in 2020, for sure, unfortunately. In the previous crisis, we saw average correction of investment volumes of up to 40% overall in two different waves. There was two different shocks, 2008, 2010. We are forecasting that this investment volume correction will be between 20 and 30%, as it states today for 2020.
Investment volumes, not prices. Sorry? Investment volumes. Investment volumes.
Overall, investment volumes as a blended, aggregated figure for the European market. So that means there's going to be less investors investing. Okay, that's the framework. Having said that, who is going to be actively investing? We still have over 70% of investors closing transactions. I think it's going to be even more polarized market. We will still see activity in the very defensive, long income, sale and leaseback, very core assets, city-centric assets. Those will always be, wanted at the price. Of course, there will be some price correction. There will be some structuring as well. We won't see not only normal transactions, but we will see recaps. We will see a lot of restructuring. In CBRE, just to give you an example, our real estate investment bank, which is 180 professionals, are extremely busy already, working on solutions to strengthen balance sheet, working on recaps, working on restructuring, working on refinancing. A lot of the investors that are behind this sort of activities are going to be very active, either for core assets or for more opportunity and value add. The opportunity value add will be pretty much adjusted or discounted in price. In some cases, 30%, 40%, 50%, especially in land. That will not be a surprise to anyone. However, the long income secure will not be so much adjusted in price, and we will still see some liquidity in this. Might be a more nominal adjustment, might be 5%, might be 10%. I think the news will be that these assets are transacting, where previously they tend not to transact in a growth market. And we will see definitely long income still very strong, and we will see corporates selling real estate or financing real estate.
We are now experiencing a more intensive use of digital tools. So, what does this mean for the future of real estate? More online shopping, less travel for business, changes in the offices because we need to work more apart. What you can foresee?
Well, Antonio, I think all of those are true. No? It just makes common sense. No? I think I think the direction of travel, I think it's very, very, there is a clear consensus. Yes, more e-commerce, more online sales. Yes, more remote work. Yes, more remote education. Yes, more products being offered through online channels in services as well. All those are true. I think what is probably more relevant or more pragmatic is probably the speed of change, which obviously may be one of the positive things of this crisis, if there is any, is that the acceleration of adoption of online solution technologies it's already growing at 2-digit levels. We are going to see that e-commerce penetration, which was relatively low in Southern Europe and especially in Portugal and Spain, it's going to go. 3 years ago we were below 10%. Now we are already reaching above 20%, and probably we will stabilize at something like 30% or 33% in the next year, 2 years. That's a big growth, and that's a big transformation that will affect the logistic chain. That will affect obviously the retail configuration and the bricks and mortar, but it won't stop there. It will stop how we do valuations. It will affect how we assess or advise people to do location analytics. Just to give you an example of what we are doing as a big services company, we are hiring we were and we will continue hiring dozens of people, sometimes even probably would be hundreds of people for the overall company in fields that are new. Mathematicians, computer scientists, customer journey experts, which are beefing up our channels that go through the online version of our services. And this is because clients are demanding it. So I think it is very exciting. We are going to see a lot of change on that regard. But of course, this will not mean that it will substitute completely the real life and the real interaction and the old way of doing business. It will just complement it. But we will travel less, that's for sure.
Is there anything that you'd like to compliment on this short interview?
No, I think thank you. I think maybe as a final message from my side, I think it's very, very important that we keep. This is a global crisis. We have to address it jointly and united. We have to avoid trying to get solutions that are isolated or temptations from the nationalists. And this is human. This comes with fear, but this doesn't bring any better solution. Actually, it is a worse outcome. So we need to rely on institutions. We need to back them. We need to rely on civil society as well, strengthen it. We need to know that at the end of the day, science will take us through, because it's always been the case. And we will be in a different place in 12 months, 18 months, hopefully 6 months. But it will go faster and it will be better if we do all these things together as described.
Perfect. Many thanks, Adolfo.
Thank you very much.